My name is Jack Hanney. I'm the CEO at Patriot Gold Group. I'm not a certified financial investment advisor, nor do I give tax advice, but I want to welcome you to an episode of the Patriot Insider, where we look ahead at the market and some of the events which could adversely or positively affect your portfolio in the coming week. As a matter of fact, this upcoming week is probably one of the most consequential weeks in the market. We have the Fed Open Market Committee meeting Tuesday, Wednesday, in which it's widely anticipated that Jerome Powell and the Feds will pause on the rate hikes. Jerome Powell and the Feds have now raised rates 11 times. It's the most aggressive rate hike cycle in history. It's why you see 30-year fixed mortgages over 7%. It's why we're seeing credit card interest rates over 20%. It was reported last week that for the first time in history, Americans have now accrued over $1 trillion in debt on credit cards. It was also reported last week that over 9% of Americans cannot pay their credit card bills, and 51% of Americans cannot pay their bills in full at the end of every month. So they have the revolving balance accruing that interest. This is called Bidenomics, and this morning it was announced that the United Auto Workers have gone on strike. So Bidenomics does not seem to be working. And this is why I believe JP Morgan just reported this week that investors' gold holdings using a new metric has risen to the highest level since 2012. We've all heard about central bank purchases of gold, and we also have all heard about BRICS last month in Johannesburg, South Africa, a new basket-based reserve currency that was started by Brazil, Russia, India, China, and South Africa. 6 additional countries have now joined, most notably Saudi Arabia and United Arab Emirates, 2 oil-rich countries. It was also reported last week that Russian President Vladimir Putin has committed to backing BRICS by gold. So what does this mean for gold? Well, rate hikes are typically headwinds for gold. It's a non-yielding asset. So typically when rates are rising, gold is pulling back. But let's look at gold's performance over the last 12 months. There's been 11 rate hikes. Gold was $1,650 an ounce back in October of 2022. Gold is now $1,950 an ounce. So gold is up 20% despite 11 rate hikes. There's one thing for certain. We are at the tail end of the rate hikes by the Feds, and we are approaching seasonally the best 6-month period for gold and silver. Q4 and Q1 historically are the very best performing 6 months for gold and silver. Now at Patriot Gold Group, we have a minimum IRA rollover of $50,000, but we also introduced in 2021 the inflation protection no fee for life IRA, and in 2023 the recession protection no fee for life IRA. The minimum rollover on the no fee for life IRA is $100,000. We also have a platinum tier no fee for life IRA with a minimum rollover of $250,000. The simple cash purchase minimum is $10,000. Now make certain to consult with your financial or tax advisor for the best allocation of precious metals in your account. You can reach us at the Patriot Gold Group at 1-888-701-3012, or you can go to www.patriotgoldgroup.com. Again, that's 1-888-701-3012, or you can visit us at www.patriotgoldgroup.com. I look forward to meeting with you next week. and finding out for certain whether or not the Feds raised rates or hit that pause button and brought the punch bowl back to the party. Thank you.